I've seen a little bit of commentary around what's happening in the States at the moment with Trump.
I think it was Tony Alexander came out with a pretty clickbaity headline. He thinks that what Trump is doing in the US will pause or slow down the Reserve Bank from cutting in New Zealand. Welcome to Checks and Balances, brought to you by Partners Life. I'm Michael Vincent. That's James Blair. And today we're talking to you about our OCR predictions.
We're back in your life, and today we're talking about what all the finance bros talk about, the OCR. It is the first time in 2025 after it dropped a hell of a lot in 2024. Michael, how are we feeling?
We're feeling good. We're feeling good. I mean, the way I think about the official cash rate is less about what is it doing in isolation and more about the trend. And for most of 2021, 2022, 2023, summer 21, 2, 3, we were trending up and now we're trending down, which is great news.
Yeah. So let's get straight to the point, Mike. What is going to happen?
I don't know because I can't tell the future. What do I think is going to happen? I think it'll be a 50 basis point cut, and that will be the last of the big chunky cuts. And then you'll be down to 0.25, 0.25, 0.25 as the Reserve Bank tries to stimulate the economy, but not overcook it, which they have overcooked things in the past.
Okay. And I've seen a little bit of commentary around what's happening in the States at the moment with Trump.
I think it was Tony Alexander came out with a pretty clickbaity headline, which he's kind of starting to do more and more these days around he thinks that what Trump is doing in the US will pause or slow down the Reserve Bank from cutting in New Zealand.
And for those that aren't finance nerds out there, why does what's happening in the States impact what's happening in New Zealand?
Yeah, cool. Well, the States is basically the reserve currency. Well, it's not basically, it is the reserve currency of the world. It is the largest market in the world. So it has basically the largest finance market in the world as well. So the price of money globally is reflected a lot by what is happening in the States.
Yeah. Right, cool. And the big thing at the moment, right, is Trump's actions are creating potentially a more inflationary environment than what was the trend before Trump got elected.
Yeah, so there's a number of things that influence this, but if you look at it from a really high level, and some of the obvious ones, for example, is tariffs would create an inflationary price environment in the States, because although you are imposing tariffs on another country, it is the people in your own country that pay the price, because the price of their goods go up as they're paying a tax on it. That would cause inflation in the economy. And when there is inflation in the economy, you don't want to be cutting interest rates because people have more money to spend. It'll keep driving prices up. So although it's not kind of a traditional cause for inflation, the only tool that reserve banks have to fight that inflation, which the Fed will be using, is their Fed funds rate, or the official cash rate, which they will stop cutting.
And how does Adrian Orr weigh up what's happening in the States versus the pain in New Zealand?
Yeah, I mean, it's always taken into account when the Reserve Bank is making their decision. This is no different to any other time. There will always be tariffs, wars, black swan events, recessions,
countries going bankrupt,
bubbles, countries going bankrupt, banks going bankrupt, shaky kind of ground in the finance world. Like, there will always be things that they're looking at.
Michael Vincent scandal.
Yeah, on a macro level. So it's more about, this isn't really any different. I still think the Reserve Bank will do a 50 basis point cut.
Humble brag from you that your scandals are at a macro level instead of a micro level. When it comes to that 50 basis point cut, the question is, everybody's trying to then go, okay, that means my interest rate when it rolls off next is going to be 50 basis points lower. That's not necessarily the case. What do you think is going to happen to interest rates when that 50 basis point cut happens?
I think for the short-term rates, they maybe pass on 25 basis points, half the cut, if that, maybe 20, 25 basis points. For the long-term rates, you might see a little bit more. It's difficult because the official cash rate is not the price of money. That is your lender of last resort. It has an influence on the price of money. It influences the floating rates quite a bit. The fixed rates, those are priced in the overnight swap market and the interbank money market. So your 1 year swap out to your 5 year swap where those are usually priced. So I would say you're probably going to get 20 to 25 basis points. The banks could pass on more for the short-term rates, but they know that as interest rates go down, more people are fixing for shorter terms, the 6 month, 1 year. So they will hold the margin on that higher and they will drop their margin on the long-term rates. You saw Westpac come out with a 4.99. That has a 4 in front of it. Great news for every person who gets honeypotted into that and think that's going to be a great rate in 12 months. It is not. Generally speaking, when you see a bank like that come out with this sort of pricing, you got to ask yourself, why are they putting on such a special at this point?
Before we move on, we talk all the time about planning and growing our wealth, but protecting that wealth is just as important. That's why having the right insurance in place can help when life goes unexpectedly.
And that's why this episode is brought to you by Partners Life, a New Zealand operated award-winning insurance provider with over 300,000 Kiwis insured and 89% of claims paid.
Partners Life understand that having some insurance is better than having no insurance. They have flexible and personalized solutions for any budget or situation.
Check out their website in our show notes below.
For those that have mortgages rolling off, and I know we're not giving personalized advice, and don't you dare sit on the
I almost did give personalized advice for it. Back out of it.
Yeah, don't you sit on the fence in terms of this, Mike. But for those that are rolling off mortgages, what are the things they should be thinking about at the moment?
Yeah, speaking to a mortgage broker.
Okay, and if we get a little bit more specific, what are some of the general conversations you're having at the moment? Are we telling people to, assuming they don't have anything particularly unusual about their financial position?
Yeah, cool. The reason I said speak to a mortgage broker, not speak to a bank, if you speak probably to someone at Westpac, the first thing you're going to say is, we've got this great 4.99% interest rate. That may not be a good fix for you. And it definitely may not be a good fix for your, it may not look like such a good rate in 12 months and you're stuck on it for 3 years, right?
Yeah.
Now, other things you should be thinking about: what are their interest rates doing? Where are they heading? What is the cash flow like in the household? You might want to fix for 6 months, but you might need to fix for 12 or 18 months, right? Or you may need to fix on that 4.99 for 3 years. That might be the best rate for you, but because the cash flow and and pressure in the household is still quite a bit, you need that. So definitely, are you going to sell? Are you going to buy? What's the market doing? What are you doing? There's a whole lot of stuff to think about.
Yeah. And for those that are coming off those bigger interest rates, Mike mentioned about, the cash flow pressure in the household. If you are in a position where you can keep those repayments at the same level, there'll be people who will be rolling off 7% to maybe like 5.5% or something like that on $1 million mortgage. That's $15,000 a year. If you keep your repayments at the same level, that's going straight onto principal. Will knock out that mortgage that much faster.
Absolutely. And I am giving some grace to people who are rolling off like 7%. I'm like, okay, you drop the repayment because they are really hurting. But what I'm saying is, when we're dropping from 6 to 5, you're keeping the repayment where it is.
Yeah. So the big thing right now is, we'll see what happens in terms of the OCR announcement. But if you have a mortgage rolling off, we run into the people where it's quite clear they haven't got advice and they have taken that 4.99 rate, or they fixed for, dare I say, even longer periods of time. It's really important that you reach out to your mortgage broker, you DM us, you can have a chat with Mike, he can talk to you about what you should do with your mortgage, have that conversation, work out what is right, because the next couple of roll-offs are really important. And there is 100% going to be those people who go like, oh, in hindsight, I should have done something different. And you just want to make sure you're not one of those people and you have the conversation, because otherwise you're dealing with those big break fees in the future.
Yeah, and I'm going to Uno reverso you for a bit here, because we don't just have people with mortgages watching. What should people be doing if they've got money on term deposit?
Oh, great question. So the TDs have been very popular as interest rates have been high and home loan rates have been high as well.
Yep.
They are obviously starting to come down as those with mortgages become happier. It's just a really good reminder for those people that term deposits are the only investment that will go backwards after inflation, because high interest rates just means inflation is high, essentially.
Yeah.
So inflation's come down, interest rates come down. You shouldn't be keeping your money in cash if it's for the long term. You should be making the longer term investment decisions, looking at whether you buy property, invest into shares, do something with your Kiwi saver, whatever it might be. So once again, reach out to a financial advisor, send us a message to the Lighthouse website, have a chat, and then, think about whether term deposits are right.
100%.
Cool. All right. So we will see what happens with the OCR. Very keen to hear your predictions in the comment section. Much love to Partners Life for sponsoring this episode. Please subscribe to this channel. Please give us a review. Please give us a like, and we will catch you next time.
Cheers.